Good afternoon, everyone, and welcome to another edition of Beyond the Bell. It is Tuesday, May 29th, 2024, to 60 seconds after the bell, which means it's time to go beyond the news, beyond the charts, beyond the holiday, beyond the bell. Hopefully, everybody had a nice, relaxing holiday yesterday and was able to relax, unwind, and, of course, honor those that have given their lives for our freedom, as is Memorial Day. So, always nice to have a Monday holiday, even if it's a bit of a somber one like that. Maybe we need to add just a Monday holiday where we, can just let's ask for Traders Day, right? Another, the English refer to them as the bank holidays. Let's add Traders Day. It's a day that traders can just numb out and not worry about the markets for a day, right? This is an interactive show, and we are brought to you by our good friends at the Blue Sky Trading Company for the clearest path to a live brokerage account, live trading with Mike every day in the Discord. In this outstanding show, you have no reason to get your content or your accounts anywhere else. Check us out, bluesky.pro. Hello, Ron, Chris, Mike, Veranormal, Drawdown, Raxeth, Drawn Cup, Hope T. Nice to see you, each and every one of you guys. We're going to go ahead and launch right into it and talk about the big picture. We're going to pull up a 4-hour chart of the ES here. We'll break down today's action in just a minute. We'll look at the 5-minute chart. Interesting day, very interesting day. Plenty I wouldn't say plenty of trading opportunities, some trading opportunities. Some movement, which I guess is fine, right? We've gotten caught in a little bit of these news vacuums over the course of the past couple of months, right? We get a chunk of earnings or FOMC or Chairman Powell's press conference, or we get PPI, CPI, all the things that the markets are very strongly reacting to. But then we get, again, sort of these pockets where there's not a lot going on, and we're in the midst of one right there. Now, we were coming off a 3-day weekend, so obviously, if our trading volume is going to be anywhere near normal for the week, we've got to pack a little extra into the 4 days without a full day of trading on Monday, and the stock markets themselves closed. So, hey, Casey, congratulations! Plaster Blue Live, waiting for the brokerage. That's great. That's great. TCGX, nice to see you as well. So let's take a look at the ES now. Our good friends over at Spot Gamma have basically been calling for a trading range this week between 5,300 and 5,400. And really, it's been between 5,300 and 5,360 the last time we made new all-time highs, which, of course, was last Thursday early morning. So, in other words, market action this week going to be driven a lot by options flows in both individual stocks and the indexes, and it's just sort of a low volatility day, right? We did have some movement today. Let's actually go into a 5-minute chart of the NQ, and interesting little up and down here between 3 and 5 a.m. Central. We pushed up. Let's see what was our movement here. We pushed up, let's say 80, 90 points, and then hovered up at the top of this zone, and then right back to where we were. And sort of this area here served as a bit of a pin all day in the price action. And right about this 18,900 here. In fact, let's go ahead and draw our line there. As you can see, guys, that's basically the area that has sort of drawn the price action back throughout the course of the day. And Casey, I'll get to your question in just a second here. But very, very light pre-morning action after that move up and subsequent move down. Nice, strong move down at the open. And we sort of defined a little bit of our recent conventional wisdom, right? Like I was talking to my community at our strategy session today, and I was saying, remember what we've been seeing in the markets over the course of the last few weeks is that if after the opening hour, if we get a strong push above or below VWAP, so if we're above VWAP and we push below, or we're below VWAP and we push above, that sort of sets the tone for the rest of the day, right? And so my intraday thesis was pretty bullish as we moved above the 18,900 levels. We moved above VWAP here at about 10 a.m. Central, 11 a.m. Eastern, but then we really got stuck in this lane between VWAP and +1 standard deviation. I was looking, this was a little bit of a triple top here. I didn't have a trade on, but I was feeling very strongly that we were going to punch above 950 and get a little bit of a run this afternoon. And in actuality, we didn't. Not only did we break back below VWAP, we broke all the way down to the -2 standard deviation level and then pushed all the way back up to the +2 standard deviation level. Again, ATR was better today. It was decent. Our deb width is okay. I didn't see a lot of hints of these moves coming. These were sort of probably algo-driven moves, sell program-driven moves here, and then obviously, again, reversing right to the buy. Again, with this little news kind of news vacuum, I think that we're in a little bit. Every move is going to be a mean reversion move, right? After every big move like this, we need to look for the reversion to the mean, right? Which in most cases is by definition VWAP, right? So we get a push up, mean reversion, push down, mean reversion, right? Then we move over here. What happens? Push down, mean reversion. Now a push up. So let's see if maybe we drift back down to the mean here. Obviously, the VWAP is, I use it one day, a daily VWAP. So this will reset when the markets reopen for tomorrow's trading session here in the next hour. But it'll be interesting to see if this 18,900 continues to act as sort of a pin in the markets and a little bit of pinning action, right? So to answer Casey's question, do you still think we are still buying the dip? Okay. So, yeah. Buy the dip implies that we're still strategically moving up, and I do think I think the answer to that question lies more in the 4-hour chart than in the 5-minute chart. So if we take a look here, yeah, at the 18,900 level. Well, so again, by definition, we're still in a bull market, right? We're still in a very, very strong run up. Basically, if we want to go all the way back to the last strong multi-candle move we had was down here on April 30th, right? And so the month of May, we've basically been about half the time we've been strongly moving upward, and half the time we've been pretty consistently moving or just moving sideways in consolidation. Now we do have these couple of candles here, but this is really just a little bit of profit taking, and which we didn't really see at any point through here. And we know it's profit taking for the most part. I mean, you don't always know in the minute, but the chart eventually tells you what this is, and we know this was profit taking because we ran back up to this point. So Casey, are we buying the dip? I would say so, but I would also, on the 4-hour chart, is not necessarily a dip, right? And the intraday action is more mean reverting than buy the dip, right? It could, because buy the dip implies one direction, when in reality we should buy the dip and also sell the pop, right? And so that was kind of my mentality as the day moved on. I just didn't really see a couple of too many setups. This was one of those days I finished basically break even after grinding through 3 or 4 trades, so a little bit of a frustrating day for me personally. But last week was pretty good, so I guess I can't complain. This, I don't have time to break down the whole sort of mentality in terms of, I have a whole webinar on the 80-20 rule, right? Which is 80% of days go a certain way, 20% of days go a different way. And this actually in reality was more of an 80% day, right? Because we had decent movement. But days where we have breakout or breakdown like continuation price action, they really tend to happen in clusters, right? And we've seen that over the course of about 6 to 8 weeks. You get 3, 4, 5 days in a row where there's good, strong movement. We get a strong direction. We get a strong trend, both intraday, on the 4-hour, overnight, et cetera, et cetera. And then we have 2 or 3 days where we're just sort of, these areas that we've highlighted in red, there's just not a lot going on. Right now, there can be some opportunities trading within these zones, right? I have a whole zone trading thesis that I'm in the process of building out into a course right now. I got about 4 I need to do first, so give that one some time. But in reality, we're just sort of in a situation where we're just pausing before we move up, right? We've rejected new all-time highs, and we made them, and then we strongly rejected them. But again, guys, this is the 19,000 level, and there's just so much that's going to happen. Again, once we push strongly up over 19,000, right, and we get to 19,100, 19,200, all the talk's going to be on NQ20K. Right, the 20K for the NASDAQ. That's what everybody's going to be talking about. So I actually think, let's see how the price action. I revised the right to revamp my thesis at any given moment, and I think we're going to move pretty strongly up to 20K, especially if let's say we get We're not going to get a rate cut in the FOMC meeting in a couple of weeks, right? Most likely not. But if they start hinting that they're going to start cutting rates into the fall, right, and maybe inflation has another good round of numbers, maybe earnings have another good round of numbers, I think we could pop pretty quickly from about 19,250 all the way up to 20K. And keep in mind, guys, the last time we hit a major number, right? We went all the way back here to 18,000. What happened? This was right here. The last time we hit 18,000, right? We strongly pushed down after that, made another run at it, broke down, and then sure enough, eventually after this W, we just sort of, this was basically kind of a really long-term, really weird cup and handle pattern, but then we pushed up. But it basically took us from the time we made our first run at 18,000 on February 12th, it was basically a good 3 weeks later before we were able to make that strong move to the 300 points up above 18,300. So that's kind of, I think, what's going on here. But my long story short, I do feel, especially as Michael said, that strong push end today, I think kind of flips the day on its head a little bit. It goes from what was a bearish day to a bit of a neutral to slightly bullish day. But as always, guys, let's just see where we open up tomorrow. That 19,000 is obviously acting as a pretty key area of resistance. We're going to need volume, and we're going to need conviction to get specifically through that area. All right, guys, for our lesson of the day today, I want to come back to the charts a little bit. I want to talk about the days after holidays. And today was sort of a very weird one, right? Today was a very, very weird. Excuse me just a second, guys. All right, sorry about that. Had to cough really quickly. I didn't think you guys needed or wanted to hear that. But you always got to be careful on combined weeks, right? Because whether the volume is equal to a 5-day week or not, which of course usually it's not because there's one less day, but if you go back and look, surprisingly, the volume is a lot closer than you'd think. And on days like today that are mean reverting days, you're fighting a lot of battles, right? And this was kind of the day I had, right, where you're fighting the algos, you're fighting the HFTs, you're fighting the big money, which is either playing the mean reverting game or just kind of sitting on the sidelines and letting the arbitrage bots get up and down, right? And so you got to be really, really careful. I think, again, I want to reintroduce that point that I made just a few minutes ago in that on days like today, they tend to happen in clusters. I would expect tomorrow to be very similar to today. Now, as we move later in the week, again, starting next week, attention is going to be shifting on the next FOMC meeting. We're as we move deeper into June, people are going to be looking towards July earnings. I think you're going to start seeing the Fed speakers. It's always important to pay attention to the Fed speakers, guys, but even more so now. They're going to start, I think, telegraphing their September move pretty quickly. Actually, let me pull up. Bear with me, guys, because I wasn't necessarily planning on pulling this up, but the Fed Watch tool. And this is available on the CME's website. It's a very nice tool, just Fed Watch tool. So we're 2 weeks. Tomorrow is 2 weeks to the next Fed meeting, right? So late this week and into next week, people are going to start talking about this. Now, there's not a lot of drama, right? We are currently at 525 to 550. That's 99.1% chance that's where we're going to stay. Late July meeting, not a whole lot of drama there either. But now September is where things start to get interesting. There's still above 50% chance we stay here at 525 to 550. But now all of a sudden there's a 41.7% chance of a rate cut. My guess is as we move into the late July meeting, so the month of July, the Fed speakers are going to start talking about September. Now, one of two things can happen, right? In fact, let me get actually, I got a blue tool. Let's use that. Ready? So either this is going to start going up, okay, and this will start going down, or you could see the reverse, right? And I think this is where things get interesting. If this gets above 50% and this begins to drop a little bit, I think the markets are going to react very favorably to that, okay? Because again, the markets were addicted to their free money for just so darn long, and now that they're paying these high interest rates and they're starting to trickle their way into other parts of the economy, and obviously there's going to be a lot of pressure on the Fed to move into various rates. Also, the election is going to play a role, right? I do think both candidates, and of course we don't know what's going to happen, and obviously I'm not stating preferences, and I ask that you guys don't either, but if we get into a situation where we do actually have debates, if we have, I would imagine both major candidates are going to have to answer some questions about inflation and what are their plans for the Fed? I know former President Trump has said he wants to clean out the Fed board. I don't know what what Biden has said, or if they can do that, or if they will, whatever the case may be, right? But that's going to be, the politics are going to start playing a role in this. And to be honest, they really haven't for the last couple of years. So it's going to be interesting to see how these again, once we get later in, right? The December meeting is going to be interesting because are you going to have a new president-elect at that point, or is it going to be the current president setting, an economic cabinet and tone for his next term? So we'll see what happens, right? There's a lot that's going to happen between now and the September meeting, but this right here is what I'm watching very strongly, because I think if this begins to tilt towards a rate cut. And remember, the Fed doesn't like to just cut rates and then raise them again, right? The first cut is going to unleash probably the floodgates for many cuts. At least that's traditionally how it's gone, okay? And so if that happens and we start looking at maybe there's a set, two rate cuts this year with a couple on deck early next year, now all of a sudden you start to see normality. You start to see businesses able to spend that money again and get cheaper loans and cheaper capital. That is something we're definitely going to pay attention to. Mondays do suck, Michael, but as Ron pointed out, it's Tuesday. I did that 3 times today, guys. I'm like, wow, this is kind of a crappy trading Monday, right? And it's definitely a crappy trading Monday because it's not Monday. This was I was basically busy all day Saturday with things. So I sit down on Sunday and I actually forgot at 5 o'clock Sunday. I started to do my market prep for Monday. I'm like, wait a minute, tomorrow's a holiday. Yesterday, however, was very relaxing. I was able to kind of hang out with the extended family. Had we barbecued some steak and chicken kebabs, and it was a nice holiday. I hope you guys had that as well. So, guys, we're going to get into our mailbag now, and any questions that you have. Again, if you have any questions you'd ever like to see that you'd like to let me know in advance, which I always encourage you to do, you can reach out to me, Trader Matt, on Discord or matt@tiresiastrading.com. That's TIRESIAS trading.com. Like all of the moderators and admins in the Blue Sky Discord, I will never message you first. That just so you know, if somebody's messaging you, nobody's tried to impersonate me yet. I don't know whether I'm grateful for that or a little insulted, right? But you guys have seen all the spam accounts of Mike or Josh or Raj or some of the other team there. Maybe the fact that I'm not an admin, I'm just a moderator, means nobody wants to try to spam me. But again, I will never message you directly, but you are welcome to message me for any questions or anything that you have throughout the trading day. I usually check the Discord. My attention is with my community during the day, but I usually check the Discord about 2 to 3 times per trading day. So are there any questions, comments, concerns, thoughts, musings? What was it? Deep Thoughts by Jack Handy for those 90s SNL watchers. It's a little 90s SNL was, right in my kind of formative teen years. So my brand of humor sort of skews towards that particular crowd. Well, Michael, it's interesting, and yes, actually, I agree with what your statement there. We got Monday price action, but again, there was good movement today. For me personally, there wasn't a ton of very quality opportunities, right? And that doesn't mean the markets are or aren't moving. I've had days where the markets don't move much, and I get a couple of really nice setups that follow through, give me my nice 25 to 30 points that I look for in the NQ, or 12 to 15 points that I'm looking for in the ES, and I'm very happy, and we move on. And then there's been days, I've told you about them in this show, where we have those insane market moves up or down 300 points intraday, and I don't see any quality setups. Again, when do you trade? You trade when you see a setup that is one of your playbooks and conforms to your risk reward, right? And so that's, again, if I don't see a setup that matches A, one of my plays, and B, has one of my risk reward setups, I don't trade. End of discussion, end of story. I have participated in low range days and made a lot of money. I have not participated or even lost money on high range days. Now, yes, I'm a momentum trader. I want to see the big moves because the probabilities favor that I will catch a good chunk of them with my setups, but that's not always the case. We have to remove some of these expectations that just because a day is a certain way, we should or shouldn't make money. You trade when you have a setup. And even then, guys, you'll have great setups and maybe 2 or 3 of them don't pan out and you have a losing day. It happens, right? Anyone who doesn't have losing days is not a trader, to be honest with you. We all have losing days. We all have losing trades. It's how we manage them, how we bounce back from them, and how we don't let losers blow out our winners. Okay. Hi, Matt. Please tell us about your daily trading process. Well, Rich, I can get a little bit into... I'll give you a little bit of my morning routine. I actually have I haven't done my daily routine webinar for, I don't think I've done it for Blue Sky. It's probably been a couple of years. Maybe I'll dust that one off and clean out the slides. I'm in the process of recording my first long-form strategy course on Renko chart trading that actually the slides are almost done. I'll start the recording for that tomorrow. So in about 2 to 3 weeks, that should be available. But my routine is actually fairly consistent. Now, I'm on Central Time, right? So markets open at New York. Markets open at 8:30. And I don't do a ton of. I think I've taken 2 trades outside of regular market hours this year. It's just not my thing, right? So I usually I do set an emergency alarm for 7 o'clock, but I would say 20 out of 21 days I wake up usually about 6:30 to 6:40, and it's kind of like clockwork. And I wake up, I go take my dog out. And usually that takes anywhere from 5 to 10 minutes for him to do all his business. I come in, I make a cup of coffee, I sit down, and that's when I look at the markets from the day before, right? I'll look at the overnight session. Is there anything that jumps out? About 80% of the time there's not. Even if it's just a clear trend, I'm just going to, unless there's some big movement or some anomalies like we saw this morning, I don't really pay a ton of attention to it. The next thing I'm going to check is the news for the day. Is there any major news things overnight, or is there any... major indicators or major whatever for the day, right? Is especially now, like the Fed speakers, what time are they? Usually major things I'll write down on my, again, trader hack, notepad and pen next to your mouse at all times. I have one down here, even though I don't do a ton of trading down here. I have one upstairs. That is a constant. So I'll write some things down. And then usually by then I'm finished with my first cup of coffee. I'll go make my second. I'll go, my dog is on a couple of meds that he needs to take. I'll give those to him, feed him breakfast, and then I will sit down with my second cup of coffee, usually about 7:45 to 8. I'll take 10, 15 minutes, catch up on sports scores and news or anything that I've missed over the course of the last 12 hours. And then usually by about 8 to 8:15, I'm locked in and ready to go. The market's open at 8:30. I usually do not trade the first 15 minutes, sometimes not the first half hour. And so at that point, I'm just establishing high a day, low a day, highest session, lowest session, things of that nature. And then I'm looking for setups, usually between 9 o'clock and 11 o'clock Central, so between 10 and noon. That's my prime trading time. It's usually about 75 to 80% of my trades, and I will trade for, usually 2 to 3 trades in that area. I do have a policy, and thankfully I've only had to invoke this probably 10 or 11 times this year. If my first 2 trades are losers, doesn't matter how small, I'm on timeout for 30 minutes. No trades for 30 minutes. And to prevent myself from doing anything, I will get up and walk away. Sometimes just for 10 minutes, and I'll sit down. But I'm very, and that's not that I think I'm doing anything wrong. It's that my setups are they're not working, that morning. And so I'll walk away. Now, sometimes I'll have a losing trade, and then a winning trade's basically a break even. I don't count that. But if I have 2 losing trades, anything more than about $500 a pop on those, I will take a 30-minute timeout. Then usually, guys, at 11 o'clock on the dot, I have my strategy session with my community every day. We go over the markets. We talk about the trades that I've made, why I made them, why I didn't make this trade. We come up with a thesis and a strategy for the afternoon. People ask questions, share whatever they got. And then I take usually about 45 minutes off, and I will go make lunch, go walk my dog, do all those kinds of things, right? And just sort of unwind and decompress a little bit, get my attention span reset. I deal with ADD, and I don't take anything for it. So I have a lot of little mental tricks, things I've developed over the years that help keep me engaged and help keep me informed as to what's going on. So after that, I will sit down and trade the afternoon. Now, again, if I'm sitting, let's say in the morning I made 3 trades, and I'm just going to give it, and I'm plus 2,800 on the day or something like that. I'm not going to be too eager to trade in the afternoon. I'm gonna probably be very, very selective of what I do, and because I don't want to come too far off of that. But as the markets have shown us, and today is a perfect example, we've been, more and more of my trading is happening in the afternoon. Like I said, in calendar 2023, probably about 20 to 22% of my trades were in the afternoon. That's leaning a little more towards 30 so far this year. So I am making more trades, and there has been some good movement. At the end of the day, I got beyond the bell, and then I got office hours with my community here in an hour, or actually in about 34 minutes. So that's my day, and I usually will try to be done by 5 o'clock. On Friday, I try to be done by noon. And just unwind a little bit. But Monday is an ease-in day for me. Tuesday, Wednesday, Thursday, I basically work 12-hour days between trading and journaling and doing courses, doing graphics, creating shots and setups for this show, doing outlines, doing coaching sessions, and then Friday I try to work about 4 hours and be done. So I try to find a really, really good balance. But it's a lot of answer there. I hope that answers your question, Rich. As far as I'm assuming that's what you meant by daily trading process. As far as getting into a trade or getting out of a trade, it depends on the setup, right? I don't have a set process for trades in general. It depends on what type of trade I'm eyeing at that particular point. What's the longest you've ever been in drawdown on an account? Well, TCGX, when I first started trading about 10 years ago, I started with a small cap stocks with a $60,000 account, and I had about a $40,000 drawdown off that. And that's when I seriously considered quitting this game and never getting into it ever again. Long story short, my stubbornness won out, but I took about 6 months off from live trading, actually about 3 months off, 6 months before I was getting back in to full-size positions, and I went and relearned everything. I reread all the trading psychology books. I developed specific plays and specific strategies. Some I learned and built from scratch. Some I, just like you guys, bought out of the box. That's why I'm, making some of the courses I am right now. So about a very, very significant. You guys, that lose on your evals and you lose 100 and 200 bucks, like that sucks. And I'm not minimizing that at all. But when you start with a live account of money you spent, basically 10 years, putting together, it's very unnerving to lose a lot of it in just a few months. It was a very humbling experience. It's the reason that I developed the very strict risk management protocols that I have. I do not have the ability anymore to sit there and take multi-$1,000 losses all day. I can't do it. I physically cannot do it. Does that cost me a little on the upside with my caution? Yeah, it probably does. But you know what? Where I'm sitting in life right now, I'm feeling pretty good. Bank account's pretty happy, and I'll be able to expand. I plan on being in this game another 40 years, good Lord and health willing, and so I'm not caught up on an extra $100 or $200 per day. I'll continue to increase my position size every 8 to 12 months and build out from there. All right, guys. So we have kind of come. Let's see, I traded 25K eval. Today my account balance was up 200 and recovered losses and finished break even. Okay, well, if you're down, don't trade just to try to break even, right? Trade when there's a setup. I don't care if you're up 300, down 300. If you see a good setup with that is part of your playbook and is part of your risk reward profile, then you take it, right? Other than that, guys, I think that's a great way to wrap up our first show on a Tuesday this week. Have a great rest of your day, guys. Thanks for watching another edition of Beyond the Bell. I will see you on, I guess tomorrow's technically hump day, not hump. I don't know. It's 4-day week, so we'll get over the hump tomorrow. Have a great rest of your night, and I'll see you tomorrow for another edition of Beyond the Bell.